Today we are looking at Nvida, and this stock has been on a monster rally these last few days. It's currently at $311 a share and climbing, up 5%, and the market's only been open for 10 minutes and it's been up 25% in the last 5 days. What we're going to do today is we're going to look at the fundamentals of the stock and then give my fair value based on discounted free cash flow and the Warren Buffett intrinsic value calculation. But first, please give a like on the video. It really helps me out. And now let's have a look at the fundamentals of Nvidia. So currently it has a market cap of 775 billion. Share price currently at around about 308. 52-week low of $115 a share and a 52-week high of $313 a share. It pays a very small dividend and the ex-dividend date is the 2nd of December. But let's have a look at the PE ratio, less than the market. So currently Nvidia has a very high PE ratio of 111, which is obviously a lot higher than the market. That is 28. Next, is the revenue increasing? Yes, the revenue has almost doubled, 11 billion to 21.8. So that is a pass. Next, we want to look at the profit and see the profit is increasing 4 billion to 7 billion. So that's another pass. Profit has almost doubled, but revenue is increasing massively as well. So they are in line, which is a good sign. Next, are they issuing more shares or buying them back? Unfortunately, Nvidia are issuing more shares, 2.396 to 2.468. So that is obviously bad for investors. But Nvidia, rather than taking on debt, are issuing more shares, and they probably think that their stock price is a little high at the moment as well, because if they weren't, they wouldn't be issuing more shares. Next is the free cash flow increasing, and the free cash flow has doubled, 3.1 billion to 6.6. That is excellent to see. So overall, we have 3 passes and 2 fails, which based on the free cash flow ratio, 700 billion divided by 6, 116, very close to their PE ratio. So that is obviously quite bad. I'm going to guess that when we look at the discounted free cash flow model, it's not going to love this stock, but you can see the dividend is nicely safe. They only pay a $500 million dividend, but with 6 billion in free cash flow, that can easily be paid. Right, now we go on to discounted free cash flow. You can see I've calculated the future free cash flows, and this will give us a calculated stock price based on the future value of the future free cash flows. So let's see what the stock is currently valued, and it is saying it is very overvalued at the minute. Based on discounted free cash flow, it would be around about $106 a share, and currently it is at 310. So that is massively overvalued according to discounted free cash flow, but I was pretty sure that it wouldn't like the stock based on the high PE ratio and high free cash flow ratio. But we also have the Buffett-Graham intrinsic value, which takes in earnings per share and expected growth. Now, Nvidia does have a very high expected growth over the next 5 years of 32.6%, but a relatively low earnings per share of 2.8. So once again, will it like the stock? Not massively. A fair value of $206 a share and a Graham price of $154. So neither model really liking the stock, but if you look at the fair value of $206 a share, this would have been pretty much a buy up until this massive rally in October. It would have purchased at that point. Graham price around 50. I mean, in June or May would have been great buying opportunities there. And obviously the stock has doubled since then. So both models saying that it is a little bit overvalued at the minute. But this stock has basically proven a lot of people wrong over the last 4 years, since definitely since the pandemic, and since then. You know, this time in 2020, the bump pandemic, was a $40 stock and is now at $300 and climbing. If we just look at some of the analyst estimates here, they have it as a strong buy, but average, they're saying it's a 20% downside at $250 a share once again before this massive rally. And on the high side in the 12 months, $320 a share. So it'll be interesting to review the stock next year and see what price it has, because people were saying it was overvalued this time last year, and the stock has basically doubled since then. So Nvidia, as I said before, has been proving a lot of people wrong. Now we're going to look at some of the technicals. We'll quickly go to a year, and first we'll look at the moving averages. As always, I do like moving averages to see see if there's any good areas of support or resistance. So we'll add 3 moving averages, the 50-day, and I will add this in green because it's the shortest. 50-day moving average. Then we'll add a 100-day here. Once again, I'll make that in yellow. And then finally, we will add the 200-day moving average. So based on what I'm thinking of this stock, I think the 200-day moving average will probably be nowhere near. Yeah, there you go. You can see it immediately. Has acted as a support point in March of 21 and then again in May. So from what this is showing me, from basically this time over the last, well, since the pandemic, if it ever gets to the 200-day, if it went down to 180, that would be a definite buy signal. Once again, you can see that the 50-day, the 100-day has also acted as resistance, as a support point. But then when would it be in the buy signal here? Well, it hit off the 100-day and it crossed through double golden crosses here, passed to the short moving average, and they would have been your buy signals there. So once again, if the stock price goes down to these averages, hits the 100-day, expect some support, as that's been pretty consistent over the last year, and then the price broke through. If we look here as well, bullish movements on the upside. So initially the 50-day has been acting as support. If it does break there, it's gone the 100-day and then had usually very bullish moves to the upside. Next, we want to have a look at MACD indicator. This is moving average convergence divergence, and wow, look at that. So what you would have looked at here is you want to see when the signal line and the MACD line cross, and that would have been at here, what, roughly around about $210 a share, and then it's went an absolutely parabolic movement. Once again here, you would have bought at around about 194 and sold at 220. So the MACD really does seem to like this stock. It has lots of opportunities to buy when the lines cross and when sell. So if you think you've missed out on this run here, you could wait a little bit for it to go back into the red. And then next time you see that cross, that would be your buy signal. It's held up basically pretty consistently this entire year. You can see there, once again, bought and sold. Maybe in February wouldn't have done it, but the last 1, 2, 3, 4, 5 of these movements have returned major profit. And then finally, we want to look at the RSI and see what that tells us, and that's the relative strength index. And you can see here that it is massively in overbought regions. Similar time, it was in overbought regions for about a month before a drop off, and we're only in the first week and a little bit. So if it gets in the oversold regions, which it's done twice, they have been great buying opportunities once again. So technicals are saying it's a buy based on MACD and the RSI. TradingView also loves this stock. You can see here that it's a strong buy based on the technicals. It's broken through all the major moving averages, and you could probably continue to ride this momentum up. If the stock does drop back down, you know, if the RSI gets low, or if the MACD crosses over, then look for that bullish movement to the upside, and then that would be a good buying opportunity as well. Right, guys, thanks for watching. Please give a like on the video as always, and I'll keep on bringing out more of these quality stocks so you can see what I think and what the models say. So I'll catch you guys next time.